Hi everyone, it's Daniel from Buttercross Estates, and today I'm joined by Adrian Sipson from the Lister Group. Adrian is a mortgage broker based out in Mansfield, and he's going to talk today just a bit about the mortgage market, what you can expect as a first-time buyer, as a buy-to-let investor, and just chat about the general market conditions at the moment. So, firstly, Adrian, do you just want to say hello and tell us a bit more about yourself and your business?
I'm a financial advisor stroke mortgage broker based out at Mansfield in Nottinghamshire. Been in the business now for about 20 years, mainly working with estate agents locally, trying to help them out with their array of clients.
Super, good. And obviously we met through Simon a few weeks back and had a good chat about each other's business. So it's good to be working with you. And today we just want to find out a bit more about what's happening with the marketplace at the moment. We're currently just coming towards the end of November, and the stamp duty amnesty is still in place. It's coming up to Christmas, so it tends to kind of slow down in the market. But how are you finding things generally since lockdown? And well, we're currently in a lockdown, but how's the market for you?
The market seems, still as you probably concur, very busy. People seem to be focusing because they're unable to go abroad and take holidays. They seem to be focusing on investing the money into properties and looking to upgrade or complete various jobs in the property that they're in by way of new kitchens, new bathrooms, etc. So we're receiving a lot of enquiries with regards to new purchases and remortgage as well. So as well as first-time buyers looking to step into the market, funded in some cases by Bank of Mum and Dad. And of course the investor side of things as well, still quite busy on those fronts. Investors looking to purchase additional properties, and also looking to remortgage the portfolios that they already have in place to try and find better products and better interest rates.
Okay, that's good. Quite a range then to keep you busy. I mean, there's been a few phases, I suppose, where you've probably seen trends and waves of things happening. So the first lockdown point, and now with the stamp duty amnesty, people have thought, well, it's a great opportunity to upsize and move and take advantage of that break. So I guess you have seen quite a range of different scenarios for people, after your services to either remortgage or get a new one. So I'm glad it's going well and busy. So typically, has the mortgage market kind of adjusted at all? Have you seen kind of rates changing? Are lenders getting a bit more cautious as we come up to the end of the kind of stamp duty amnesty?
Very much so. Dan, over the last probably 9 months or so since the lockdown has come into play in March, we've seen a lot of lenders really err on the side of caution. They've removed a lot of their high loan to value products. Again, looking at the market in general, reviewing people, their own clients and their position. I think lenders are looking at the risks involved with the COVID situation, looking at applications coming in, especially from self-employed people, lenders are very cautious. Mortgages are taking a lot longer to underwrite now than they have done previously, because a lot of the mainstream lenders, the likes of the Nationwide, for example, Santander, Halifax, a lot of their staff have been told to work from home. We have underwriters in the banks working from home instead of working from the mortgage centres. So a lot of the underwriters don't have direct access to the systems that they have in place previously. So the knock-on effect is that lenders are taking much longer to underwrite mortgages and provide decisions for brokers like ourselves. Prior to the lockdown, we were receiving mortgage offers in some cases within a couple of weeks. But now some lenders are taking a week to even review a piece of information that we're sending across to them. And if that information isn't right, or they need further information as a result of the information that they've received from us, again, we will submit a piece of information to them, and it may be another week before they're even taking time to look at it because of the backlogs. Yeah.
Well, that's tough and stressful, I'd imagine, for a lot of people in that situation. So.
Oh, absolutely. I've got a couple of first-time buyers at the moment that I'm dealing with. The mortgages has been running for several weeks. We've finally now managed to get a mortgage offer in place for them, and the solicitors now have complications with regards to the purchase, and it's just builds the frustration for them, especially being first-time buyers. It's all new to them, and all these guys just want to do is get the keys and move into the new property before Christmas. And of course, as you can imagine, the stress levels are building for them.
Yeah. If only it was that easy, Adrian, as you just said then. Get the keys, move in, it's fine.
Absolutely, yeah, absolutely. We both you and I guess, we try to make the process as slick and swift for all the purchasers as possible. Even the investors out there that are looking to complete on a purchase as quickly as possible, so that they can move tenants into the property and start to realise a return on their investment. Again, the process of completing the mortgages and completing the purchase has slowed down quite tremendously, even to the fact that a lot of the solicitors' practices that I guess you and I are dealing with, those guys are working from home too. So again, the process is slowed down quite tremendously because the professionals don't have access to the systems that they use, and it just slows the process down.
It does, yeah, it does indeed. So talk me through typical first-time buyer. What are they looking at in terms of getting a decent rate in loan to value, and how long is that process? What are you kind of seeing from coming to you to getting a mortgage offer, roughly?
Generally, we try to advise most first-time buyers to look to place a sizable deposit down if they possibly can. I know it's not always easy, but generally lenders are capping what they class as their loan to values. So essentially, we are advising first-time buyers to look to raise a deposit of around about 10% or more of the purchase price if they possibly can. Because as I've mentioned previously, lenders are very cautious. So they're looking for a bigger deposit from these guys, just in case the guys are made redundant and are unable to pay the mortgage. Then obviously they want to realise that property back from them as quickly as possible so that they can sell it and realise their investment back on the mortgage. So it is tough for first-time buyers. Rates wise, the Bank of England base rate, as you'll appreciate, is the lowest that it's ever been at 0.1%. So off the back of the low Bank of England rate, generally lenders are producing quite competitive mortgage rates, and even up to 90% loan to value. So the market is good, but it's very slow.
When you're looking for a buy-to-let investor looking for a second property or another property, typically what would they be looking at for to get a decent rate and a decent deal?
When it comes to buy-to-let investors, we generally advise them to look around about the 25% mark for a deposit. That there are some specialist lenders out there that are doing 80 and 85% loan to value mortgages, but the knock-on effect of putting a smaller deposit into that is that the rates are higher, and of course the underwriting is tougher because these specialist lenders need more information from the buy-to-let investors. So generally we advise most buy-to-let investors to look at a deposit of around about 25%.
Okay, sounds good. The mortgage lenders, as I understand, you have to provide information across the whole portfolio, not just the one property that they're looking for. Is that right?
Absolutely, yeah. Generally, now lenders will look to underwrite a case on the basis of the provision of information from an investor across their whole portfolio, even if the investor has properties that are mortgage free. We still have to disclose that information to lenders so that they can underwrite the risk involved. So some lenders don't require a landlord to necessarily have an employed or self-employed income, but they will still need information across the board, across their whole portfolio, as you mentioned.
Okay, so it's important to have that information ready to hand, like you say, because you don't want to be going back and forth with the lender if it's taking a week for them just to review something you send across. So
absolutely, a simple spreadsheet to document a landlord's property address, postcode, the approximate value of the property, if it has a mortgage on it, how much is outstanding, the lender details, the account number, etc. And just simple information like that will assist us to place a case with the lender for them.
Yeah, super, good. And I guess from an agent's point of view, if someone is looking to buy a property, I'd always make sure that you get your agreement in principle in place, armed and ready, so that you're in a good position to make offers on properties. So, if that's going to take a bit of time, speak to a mortgage broker like Adrian, get that ball rolling, be armed with your mortgage in principle, and then you're in a good position to make offers and proceed and potentially be in, maybe not for Christmas now, but certainly into the new year and before the stamp duty amnesty ends. So that's good. And again, coming back to the market and what you're seeing with the confidence and surveyors and their feeling, are you having any deals at the moment kind of being downvalued? Is it kind of a normal level, or are surveyors being extra cautious from pressure from the lenders?
We're still finding, Dan, that lenders, the valuations, surveyors are going out and looking at properties, and we're not seeing too many down valuations. So that side of the business, and surveyors are on the side of caution. We haven't seen too much of that. I've heard the odd brokers that we're in contact with that have had the odd one or two properties that are being downvalued. But as you probably know yourself, the market is quite buoyant. It's seeing property prices increase month on month. The surveyors are still going out. They are still valuing properties, obviously, with social distance rules applying to them. We're not seeing too many properties being downvalued. I did have a case a couple of weeks ago where I was looking to complete a remortgage for a client, and one of the properties that I'd submitted, the value came back at slightly less than I had anticipated, but with a call to a local agent in Nottingham, I was able to provide the evidence to substantiate a dispute with the lender. They accepted my evidence that I'd submitted, and the property was upvalued back to its original value that I'd submitted when I submitted the case.
Well done.
Good news really on that.
Yeah, super good. In the recent years, some buy-to-let investors have been purchasing in companies rather than individual names for tax reasons. Clause 24 kind of came into force and over the last few years. Have you seen a kind of a rise in that yourself with clients you work with, people buying in companies? And again, how have the lenders responded to that kind of uptake of, of rates come down there? Has it been easier if more people enter the market?
Yeah, we've seen quite an increase in applications or inquiries with regards to an SPV or limited company arrangement from investors. Investors that tend to be the higher rate taxpayers look at this as a more cost-effective option for them. But we generally advise all our clients. We're not tax advisors, as you'll appreciate. Yeah. So we generally advise all our clients to take some advice from not necessarily an accountant, but more a specific tax advisor, just to gain the options as to whether they need to go down the personal buy-to-let route, or whether they need to go down the limited company or SPV option. But again, we can, if clients want to give us a call to discuss, the difference between a normal personal buy-to-let or a limited company buy-to-let, more than happy to chat. Generally, the limited company buy-to-let mortgages are a little bit more expensive than a personal buy-to-let. So the client needs to factor those costs into the equation if they are looking to save money with regards to the tax that they'll pay. But as I say, between ourselves and a tax advisor, we can generally point the clients in the right direction.
Super, that's good. Well, I think we've covered some good ground there with kind of first-time buyers, buy-to-let landlords, and those purchasing through an SPV. So, Adrian, thank you very much for your time today. Good to chat to you. And we'll post contact details, so if anyone needs to chat further about a specific case they have, or just chat to you in general about the mortgage market, then feel free to get in touch with him. He'd be happy to speak to you. So, thanks, Adrian. Speak to you soon.
Thanks, Dan. All the best.